Right. Good morning to the hockey family. It is Monday, August the 5th, 2024. Hope everyone's enjoying the last little bit of summer here before off the season starts. But quick housekeeping item. Late last week, we emailed out the scheduling links for our review call here before the season begins. Let us know if you don't see that. Maybe it's in your spam folder, but we'd be happy to send that out again if you don't see it. Last week, really interesting for global financial markets, right? So the U.S. Federal Reserve met on Wednesday. Nothing surprising in that meeting. They held interest rates where they are, but the tone of the meeting, like just kind of the language was interesting. It was much more like accommodative, kind of friendly, much more so than we would have thought. And I almost wonder if they kind of knew the data that was going to be released here in the U.S. Thursday, Friday. So we received a disappointing initial jobless claims Thursday. Friday, the July employment report was not good. Okay, so only 114,000 new jobs added. The unemployment rate increased to 4.3%, which was a bit of a surprise. Okay, so we've talked about this a lot, the way like the yield curve works, but on that data, right, you have yields go down, which means bond prices go up, right, because that's an inverse relationship. And then on the equity side, not surprisingly at all, you have equities sell off, particularly technology. Okay, so yeah, I think just the main point I wanted to make this morning from an educational standpoint was just like, it'd be really, really easy to get in the trap of, and this is called recency bias, where you just look at what the market's done the last 2 to 3 years. Bonds haven't performed all that well. Technology's done really, really well. And investors get in the trap of removing diversification, getting a little bit too concentrated in their asset allocation, and it can be really bad. So with yields falling as much as they did last week, you saw bonds just have a wonderful week, which acts as a nice counterbalance in a portfolio, particularly for guys later in their careers, where that larger allocation of bonds and cash makes sense. So we hope everyone has a great week, and we'll talk to you soon. Thanks.